Okay, I think we're going to make a start now. Welcome everyone to XReg's webinar on the recent guidelines issued by ESMA on the qualification of crypto assets as financial instruments. This is part of our series of MiCA webinars. Thank you everyone for joining us. For those of you who have not come across it, we produced a summary with an initial analysis of the guidelines, and we will be posting a link in the chat in case you want to have a look at it. As we all know, this is an area of a lot of uncertainty with different interpretations across the EU. These guidelines aim to help both market participants and regulators in their assessments of whether crypto assets should be considered financial instruments. Much guidance which the sector has been asking for a number of years now. We know that there has been debate going on for a while on this topic. A survey was undertaken approximately 6 years ago, where the conclusion was that regulators did not agree as to the qualification of whether crypto assets should be considered financial instruments. The aim of this consultation is to clarify that. Before we go into the slides, I'm going to run through a couple of housekeeping matters. The webinar will run for approximately 40-45 minutes. We'll be leaving 10-15 minutes at the end for questions and answers. So if you have any questions, please post them in the Q&A button. If we have time at the end, we may keep the webinar open for a short while longer to have a post-webinar discussion or answer any outstanding questions. In terms of the agenda, I'll give a quick introduction to XReg, then a quick overview of MiCA, MiFID, and these guidelines. Then we'll have a couple of slides on the different assets that are covered by these guidelines. At that point, I'll pass on to my colleague Anna, who will be talking through some of the key categories of assets that are more problematic and raise a lot of issues. Then she will take you through some of the other less contentious categories of assets. And finally, we'll have next steps and conclusion before we move on to the Q&A. So XReg Consulting, we're a global public policy and regulatory affairs consultancy specializing in crypto assets with a team of mostly former regulators and policymakers with practical experience in the development of regulatory compliance strategies. I am Ernest Lima, one of the founding partners of XReg, and I am joined by my colleague and senior consultant, Anna James, who is part of the EU and MiCA team. So a quick recap on MiCA. In short, MiCA is a very comprehensive framework for crypto assets in the EU, capturing issuers of crypto assets and crypto asset intermediaries known as CASPs. These include exchanges, custodians, operators of trading platforms for crypto assets, etc. The intention of MiCA is to capture all crypto assets that currently fall outside the scope of any other EU regime. It is an EU regulation, so it's directly applicable. So it achieves uniformity as much as possible across the EU. MiCA applies for issuers as at the 30th of June of this year, and for CASPs as from the 30th of December this year. A quick overview of MiFID. So MiFID is a Marketing Financial Instruments Directive. It's the EU regulatory framework for investment services and activities, regulating investment intermediaries, securities markets, trading venues, all in relation to financial instruments. As you all know, financial instruments are considered securities in many jurisdictions. MiFID is a directive and not a regulation, meaning that the text is not directly applicable, as MiCA will be, but rather member states will need to transpose them into national law. It is therefore subject to interpretation and different approaches taken by jurisdictions across the EU. One key area of discrepancy is around the definition of financial instruments, which is the assets that are covered by MiFID. So moving on to a quick explanation of standards and guidelines that are issued by the European Supervisory Authorities in the EU. So these standards and guidelines are produced to supplement EU legislation. They are normally made in the form of regulatory technical standards, implementing technical standards, or guidelines. Guidelines aim to provide clarity and guidance on the interpretation and implementation of EU regulations and are considered authoritative interpretations by regulators and market participants alike. Although not legally binding, they carry significant weight, having indirect legal effect and can be persuasive in court. The process after they are issued in draft form normally follows a consultation period during which industry can provide feedback and their comments. In this case, ESMA is consulting on the proposed guidelines for the qualification of crypto assets as financial instruments. So it's extremely important that if you're affected by these, that you respond to the consultation. So this is talking about the consultation. To date, we all know that there has been very little guidance in this area, leading to regulators treating crypto assets differently, with some considering some crypto assets as financial instruments and others not. So a lot of uncertainty for market participants and not knowing which regime would apply. One of the main objectives of these guidelines is to provide this needed clarity, particularly on whether it's MiFID or MiCA that would apply, depending on the asset in question. Just a point of clarification, these guidelines apply to all crypto assets apart from stablecoins, so it doesn't apply in relation to asset reference tokens or e-money tokens. Once finalized, we hope that these guidelines will promote convergence across the EU and will be widely used by market participants and regulators to help in their assessment of the assets in question and determine which regime should apply. So why are the guidelines needed? In this slide, you can see that there are several terms which are relevant for both regimes, either MiCA or MiFID, and they are not defined in either. That obviously creates problems. The guidelines are trying to provide more clarity as to what these terms mean. The holes in the boat that you see on the slide represent these definitional gaps. So the guidelines are aiming to plug these holes and ensure consistency, or as much consistency as possible, in asset classification. Another issue is that the definition of crypto assets in MiCA is very broad. So a lot of assets could fall within that definition, which does create an issue and uncertainty. MiFID II, as I mentioned before, was transposed differently by each member state. What encompasses a financial instrument has been interpreted and defined differently by EU countries. So the guidelines are looking to provide that needed clarity in this area. So in terms of classification of crypto assets, the guidelines do not provide a standardized test for such classification, which is what MiCA had requested. Instead, it provides criteria and conditions to help determine such classification. Anna is going to be taking you through some of these assets later on and going through such criteria. It is important to clarify that the technological wrapper is not a key factor for an asset's classification. Instead, what matters and what needs to be considered at all time are the asset's features, design, and rights. It is also important to emphasize that a case-by-case assessment is necessary, taking into account a substance over form approach. So you need to look beyond the surface of the formalities to understand the true substance and economic impact, giving more weighting to the commercial reality over the legal form or structure. So offerers or persons seeking to admit such assets to trading, who are primarily responsible for the correct classification of the assets, will need to be looking very closely at these guidelines. However, also important to note is that the classification can be challenged at any point, including regulators. Before I pass on to Anna, I just wanted to illustrate in this slide the different types of assets that are relevant and are covered by these guidelines, and you can see which ones apply under MiFID or under MiCA and which are outside of scope of EU regulation at the moment. In the next slide, you will see a visual representation of why these guidelines are necessary. So MiFID is a starting point, the top level. If assets are considered financial instruments, they obviously fall under the MiFID regime, and MiFID applies. However, because of the different interpretations and the different definitions that we've been mentioned earlier on, of financial instruments specifically, there is an inconsistent classification of assets, meaning that the same asset could be dealt with under MiFID, or if not, it falls onto the next level and would be captured by MiCA. So this means that there is an inconsistent approach currently in place in the EU. And now I'll hand over to Anna.
Thank you. Thank you very much, Ernest, and good afternoon, everyone. From the assets that are covered by the guidelines, we have identified three that are the most significant for the assessment and the correct classification, given that the conditions and criteria set out in the guidelines would quite easily be met by most or many crypto assets. But before we look at the key categories identified and the rest of asset categories, I thought it would be important to look at the definition of crypto assets under MiCA, given that the guidelines build on from that. So crypto assets are defined in MiCA as being a digital representation of a value or a right that is able to be transferred and stored electronically using a DLT or similar technology. As Ernest has already mentioned, a very wide, the definition is so wide that it could apply to many assets. And so the classification of these as financial instruments or other types of assets is so important. The criteria that would have to be met in order for an asset to fall under the definition of a crypto asset would include that the asset is transferable to other holders, that it can be accepted by players other than the issuer or the offerer, that it is fungible, so it can be exchanged one token for another without the value being different. And importantly, that these types of assets do not grant financial rights that are linked to company profits, capital or liquidation surpluses, or voting rights in a company's decision-making process. We will see how these criteria will very likely be tricky, given that it is not always entirely clear what types of rights are linked to company profits, and likewise voting rights in a company's decision-making process. Just to note that crypto assets may be linked to certain profit or governance rights, and they could also provide consumption and utility rights. So moving on to the categories that we identified as the most significant or the key categories. Transferable securities are the first asset class that may be a little bit problematic. Transferable securities are defined under MiFID as those classes of securities which are negotiable on the capital markets, with the exception of instruments of payment. From this definition, a lot of the key terms aren't defined under MiFID or other EU legislation or measures, including, for example, classes, negotiability, capital markets, and instruments of payment, which highlight the importance of this type of measure, the guidelines, to provide more clarity and ensure that all member states understand the same thing for the same terms and definitions. So in order for a crypto asset to be deemed to be a transferable security, the criteria that has to be met cumulatively is for it to be a part of a class of securities, which would mean that the token or the asset has been issued by the same issuer that it is interchangeable, so the same type of asset can be exchanged for another of the same unit or asset, and that it provides access to equal rights. The rights that a transferable security would normally provide access to would include, for example, dividend rights or decision-making rights in the companies, in company-related matters, or rights to liquidation surpluses or capital. The second criterion for a transferable security classification to be assigned is that the asset is negotiable on the capital markets. This would mean that the asset can be transferred or traded on capital markets and that it is fungible, so that it can be exchanged for other of the same types of assets. And lastly, that it is not an instrument of payment. Here, the guidelines note that the notion of an instrument of payment, which is not a defined term under MiFID, is not the same as that of a payment instrument under another EU legislation, which could make it difficult to differentiate. However, not to meet the criteria to be a transferable security, this would be applied quite consistently throughout different crypto assets. Some of the challenges that we have identified for this type of asset includes that the criteria that would make an asset a transferable security would quite easily be met by crypto assets. And also there are areas where distinguishing between one type of right and another one may not be as straightforward. So specifically in relation to the types of rights that may be granted by certain assets, we have, for example, rights that are granted as a dividend, which should be distinguished from financial rights that are not related to a company's profits or liquidation surpluses. If a crypto asset grants certain financial rights that are not related to company profits, then that would not bring it under the scope or definition of a financial instrument. However, the differentiation there is not entirely clear or straightforward, as I just mentioned. Similarly, the voting rights that may be granted by an asset or by a financial instrument or a crypto asset may also not be as clearly distinguished. So voting rights in the company's decision-making process compared to voting rights on a project. What is the difference between a company's decision-making process and decisions on a specific project? In some instances, may be quite clear-cut, but in other instances, the lines may be quite blurry. Moving on to the second criterion, which is the one on negotiability on capital markets. Most crypto assets will meet the notion of negotiability, given that ownership of these types of assets can be transferred quite easily because of the way they're issued on a DLT. And importantly, the concept of capital markets, which is not defined, it is unclear whether it is the type of asset being traded in these types of venues, which defines whether the venue is defined as a capital market or not, meaning that incorrect classification of assets could mean that financial instruments or crypto assets that are not financial instruments are in some instances traded in capital markets. So clarity around that would be beneficial. And lastly, on the concept of capital raising and how this needs to be a consideration to determine whether something is available to be traded on a capital market. Capital raising in the traditional world could be similar to fundraising through crypto asset issuance. So a little bit more clarity around this area would be beneficial for market participants and for national competent authorities. I think we can move on to the next slide. The second asset category that we identified as significant are derivatives. Derivative contracts are a type of financial instrument which makes reference to an underlying asset. So the criteria that needs to be met by a crypto asset for it to be brought under this category is that the crypto asset is a digital representation of the contract, the value of which is determined by an underlying reference, and that underlying reference may be an asset, a rate, an index, an instrument, a commodity, including a crypto asset, a basket of crypto assets, and indexes on crypto assets. So the guidelines do clarify that crypto derivatives, where the only aspect of a crypto asset is the underlying asset, remain financial instruments. The other criteria is that when the value of the reference changes, the value of the derivative contract changes in line with those changes. And finally, these types of assets are settled in either cash or physically. And this is the point where industry was expecting a lot more clarity around. However, as we will see now, this point remains unclear, where settlement is neither in cash or physically, but crypto derivatives are settled in crypto assets. Just quickly to note that an indicator, which is not strict criteria for the classification of assets as derivatives, is whether an agreement with terms, maturity, and other elements are present. Then this would be an indicator that an asset could be deemed to be a derivative. The challenges we've identified, the challenges and the point that I just mentioned around settlement is a big one and an issue that has been problematic for a long time now. Most crypto exchanges make crypto derivatives available to be traded. And given this uncertainty, crypto derivatives settled in crypto assets have continued to not necessarily fall outside the scope of MiFID, but haven't been captured by MiFID. And the guidelines don't provide clarity around whether they will fall under MiFID or whether they will be considered crypto assets. A crypto asset, of course, does not meet the notion of cash or a physical asset, and there is no appetite for crypto assets to be brought under the notion of cash. So this will continue to be a tricky aspect and something that will require a lot more clarity and guidance on. If guidelines in future, which are expected to deal with this point specifically, deem that crypto asset derivatives settled in crypto assets are financial instruments, then that will have a huge impact, given that most crypto exchanges operating in Europe will be at present in breach of EU requirements, given that these types of assets would necessarily require a MiFID license to be made available or traded in these platforms. So if just to wrap up the challenges on derivatives, if a crypto exchange offers spot exchange and also derivatives as a CASP, will it then need to apply for a MiFID license, or what will the practical issues be? Moving on to hybrid tokens, and the third key category identified from the asset categories available Hybrid tokens are assets that have both the qualities components and property purposes of a financial instrument and a crypto asset. And the guidelines make it clear that wherever there is the financial instrument quality purpose component, that one will take precedence always. So hybrid tokens, if they're at any point considered hybrid, meaning that they have both characteristics, they will always be dealt with as a financial instrument and subject to MiFID rules. Issuers should not use marketing materials or other materials to misrepresent these assets. And if in cases where there are characteristics akin to crypto assets, those must not be presented as the predominant ones. And national competent authorities are reminded that they should not rely on labels assigned by issuers. Some of the challenges with hybrid tokens include the primary challenge would be where the token changes through its life cycle. So not so much for assets that are deemed as financial instruments from the outset. So if something is issued as a financial instrument and then somewhere down the line its properties change, that wouldn't be as problematic because it would already be complying with MiFID rules. However, if a crypto asset is issued as a crypto asset because it doesn't meet the criteria or conditions to be deemed to be a financial instrument, and it changes over time, then this could be quite problematic because if at any point the asset is deemed to be a financial instrument, but it has already been issued and it's already been admitted to trading in crypto asset trading platforms, then what are the practical issues? If the asset has to be delisted, what will be the impact on holders? And importantly, access to crypto asset trading and access to traditional market trading isn't the same. So some holders may no longer be able to access these assets that are now available under traditional trading venues. Another important question that hybrid tokens and their correct classification present is whether crypto asset service providers that operate trading platforms will be willing to take the risk of listing certain things that may change over time, and whether they will have the appetite to build processes to monitor the types of assets traded on their platforms on an ongoing basis to make sure that at no point these assets are more akin to a financial instrument and therefore should no longer be offered under those types of platforms, crypto asset trading platforms. Moving on to the other asset categories, which are still relevant, however, it may not, the criteria and conditions set out in the guidelines leave not as much room for interpretation as the others, and meaning that crypto assets that need to fall under this criteria would be categorized as such with less issues. The first are money market instruments. So money market instruments represent short-term debt commitments and that are negotiable and are issued by either governments or firms. The criteria that money market instruments must meet is that they have legal and residual maturity, their value is stable with minimum volatility, and they align returns with short-term interest rates. Examples of money market instruments are treasury bills, certificates of deposit, and commercial paper. And as mentioned, crypto assets that have these characteristics would quite easily be brought under the money market instruments. It's unlikely that many would meet this criteria. The second asset type that is covered by the guidelines, and that could also be one under which certain crypto assets fall under, are units in collective investment undertakings. If a crypto asset is deemed to be a unit in a collective investment undertaking, then one crypto asset would be one unit in the collective investment undertaking, representing the investor's rights in that collective investment scheme. And the issuer would be the investment scheme. The criteria that a crypto asset would need to meet in order to be deemed to be a UCIT is that that capital is raised from token holders or issuers and is pooled to be invested with the objective of generating a pooled return for the token holders or the investors. The scheme would have no other commercial or industrial purpose but to invest the pooled funds and generate a pooled return. And the token holders or investors would not have a say in the day-to-day management of the scheme. A CIS manager would invest the funds as defined in an investment policy, and there would be no other uses for the entity. The guidelines clarify that diversification or liquidity are not strict criteria for an asset to be classified as a unit in a collective investment scheme. There's a point to raise here, and it is that there has been a bit of a lack of clarity or a potential risk raised when it comes to staking. So a lot of companies offer staking services with other companies, and there's always been the question of whether pooling token holders' assets to then stake with a separate entity could be considered or could bring the assets under this category. But given the criteria and conditions set out in the guidelines, we think that it is less likely that questions remain. So the criteria is quite helpful in that sense. The last financial instrument asset type covered by the guidelines are emission allowances. The guidelines specify that it's quite unlikely that a crypto asset would be deemed to be an emission allowance. The criteria to be met in order for a crypto asset to be considered an emission allowance would be that it represents a right to emit a specified volume of greenhouse gases, that it is tradable and complies with EU emissions trading scheme or equivalent. They are endorsed by the EU or member states, and they symbolize an approved unit. Again, these are not, this one is not too troublesome. And although we see that anything relating to energy will become more tradable and there will be more markets for these types of assets, and also that tokenized emission allowances may be the most efficient way to trade these types of assets. As Ernest has mentioned before, the technological wrapper is not a key consideration, and tokenized emission allowances would remain financial instruments under MiFID. And now, non-fungible tokens are not a financial instrument and don't fall under the scope of MiFID, but they're not a crypto asset either and are currently outside the scope of MiCA also. This doesn't mean that they will not be brought under the scope of regulation at some point in the future, which could be likely. But in order for an asset to be deemed a non-fungible token, it has to have unique characteristics and not be interchangeable. So one non-fungible token should not be able to be traded for another similar token because their value shouldn't be equivalent. The value of a non-fungible token must be linked to the individual characteristics and utility conferred by that specific asset. and the value should not be influenced by other non-fungible tokens, in particular when we talk about a collection of assets. Where non-fungible tokens are issued as part of a collection, this may be an indication that the assets are not fungible, particularly when it's a big collection. And also importantly, the guidelines specify that where the utility or access rights by a non-fungible tokens are equal, regardless of one non-fungible token and its value being different to another, if that utility and access rights are exactly the same, for practical purposes, it could be considered to be fungible. So lastly, just to finish off on NFTs, if a non-fungible token is fractionalized, then those fractions of the token are deemed to be fungible and should be dealt with as crypto assets under MiCA. I will hand back over to Ernest, who will talk to us about next steps and just some concluding remarks. Thank you.
Thank you very much, Anna. That's really interesting. So we've heard Anna highlight some of the key challenges and impact that are specific to some type of assets, particularly derivatives, transferable securities, and hybrid tokens, but we know there are others. There's also other challenges, for example, other challenges for regulators. There's some that will lack capacity or expertise to make their assessment as to what is what and how they should be classifying such assets, particularly if some areas of guidance, some of the less clear areas that have been identified in today's webinar are not clarified or updated in the revised guidance. Another issue would be that regulators may be inclined to err on the side of caution and consider or treat crypto assets as financial instruments because that is what they are more comfortable with. And then that would be a wrong classification in some cases. The MiCA also provides the ability for competent authorities, regulators that are unsure about the classification of an asset to request an opinion from the European Supervisory Authorities. This could be a challenge for European Supervisory Authorities who may be flooded with such requests, and they would only have 15 days to provide such an opinion to the regulator that has requested it. There's obviously also challenges for issuers of assets and crypto asset service providers when required to make their own assessment and when looking at changes of a particular asset, like Anna mentioned before, if it's a hybrid token, how do you classify it when there are changes to a particular one? When does it trigger? What regime should apply? We all know that lawyers will get involved, and lawyers will inevitably be creative when interpreting some of these, particularly some of the more subjective elements of these guidelines, which will inevitably lead to a lack of harmonization in some of these areas. There's also challenges around passporting. So if you're a firm that is authorized under MiCA in a particular jurisdiction because your assets have been classified as crypto assets in that jurisdiction, can you passport into a jurisdiction where that might be considered a financial instrument, that particular asset? That is a risk that the host state in that case might not be comfortable with an inward passporting of a firm where it is not licensed under MiCA. So there is scope for regulatory arbitrage because of this, unless all of this is clarified. There's also questions of whether firms should seek a MiFID authorization instead of a MiCA authorization. We all know that there are challenges in MiFID. There are some areas that don't work for crypto assets, hence the creation of the pilot regime regulation. There are also some requirements in MiFID that are very onerous, for example, around transaction reporting. But if you get a MiFID license, you could notify your home state regulator and top up your authorization to provide crypto asset services. So that's an advantage. So there's pros and cons, but there are risks of only having a MiCA license where a crypto asset could then be considered a financial instrument, as Anna has highlighted. So in terms of next steps, I think everyone agrees that there is a need for a common understanding in the EU on this subject. The hope was that ESMA clarifies some of these points in the guidance, which it does to some extent, but as highlighted today, there are some areas of uncertainty. The consultation period closes by the 29th of April, this year. So I urge you to have a look at it if it can affect you and respond. Don't underestimate the power of having a lot of people responding on particular issues, because it will be taken into account, especially if it helps achieve the desired outcome of providing regulatory certainty and avoid divergent interpretations across the EU. Will we see some updates to MiFID II? We're yet to see that. We know that the definition of financial instruments, as we've said on various occasions today, has been defined differently by different member states. There is a need for consistency on that. So we are likely to see some updates at some point on MiFID. And we are also expecting some joint guidelines by the European Supervisory Authorities on the content and form of legal opinions on the qualification of asset reference tokens. So as I said before, asset reference tokens are outside scope of these guidelines, but there will be additional guidance which we're expecting later this year. And to have some concluding remarks, whilst MiCA does provide a lot of regulatory clarity in the area of crypto assets, it doesn't resolve all the issues, especially the ones raised today. Instead, it has passed the ball to ESMA for ESMA to provide the clarity. And although ESMA has tried to provide the much needed clarification in some of these areas, it does not fully achieve it in these guidelines, in our view. And the clock is ticking. As we said, MiCA starts applying us from June this year for stablecoins, and later on at the end of the year for CASPs. You need to consider if you're a CASP, and if you are a CASP, which license would you go for? Do you need a MiFID license? Do you need a MiCA license? If you are an issuer, what do you do? Do you follow the issuance regime under MiCA or the traditional securities issuance regime following the prospectus regulation and other existing financial services legislation? There are clearly some fundamental questions which remain unanswered. So have a look at the guidelines, have your say, respond to the consultation, because it's extremely important. And that's the end of the webinar. I think we've got a few questions. If you have any other questions, please post them on the Q&A. We've got one question here from an anonymous attendee. He's asking, or she's asking, on the global stage post-MiCA, we might find that jurisdictions will handle crypto assets as financial instruments and others that don't. Do you see a need for greater harmonization in the categorization of crypto assets by financial markets? Definitely, right, Anna?
Absolutely.
I think that we've been talking about it in the context of the EU, but it equally applies in a global stage. Crypto assets, as everyone knows, have no borders. Transactions are happening every day across multiple jurisdictions, numerous transactions, very quick transactions. So there is a need for a greater global harmonization in this area, definitely.
I agree. There's another couple of questions.
We do? Yep. Let me just check. Second question. We've got another question here. Is there a risk that decision-making rights provided by DeFi governance tokens makes some of them financial instruments? Do you want to take that one, Anna?
Yes, absolutely. This is one of the interesting ones, and very relevant, because where there are certain rights attached, including the decision making rights, some of these governance tokens issued that may be crypto assets at some point, the rights that are granted may change over time, and specifically in DeFi platforms. If a governance token then it allows holders to make votes regarding certain things, including certain decision making that is not clearly delineated between a company specific decision making and other decision making, then this may bring them under the category of financial instruments, and it absolutely more clarity around this point would be very welcome.
Thank you, Anna. We've got another question from Patrick. Given that the financial instrument classification is contained in several pieces of national legislation, how will European authorities provide feedback on rules that may apply very differently across the EU? That's a very good question, and which is why we mentioned that there will be a need for some consequential amendments to some pieces of legislation. For example, we talked about MiFID II, and it's a directive, and it allows for national legislation to interpret things differently and define things differently, which is exactly what's happened. So we are likely to see more EU frameworks for financial services converted into EU regulation, so that there is that level of consistency, particularly in some key areas such as defined terms, which have a major impact on whether or not a particular instrument falls within one regime or another. So I think there has been some debates about some of these areas of discrepancy for a number of years now. With MiCA coming into play very soon, there's going to have to be some changes to make sure that we plug whatever gaps are there and ensure as much consistency as possible. And thank you, Elisabetta, for posting the link to the guidelines, to the the guidelines for consultation. That's right. We've got another question here. Has the EU issued any specific guidance on the tokenization of real-world assets?
Or risk-weighted assets, I think, maybe the
okay.
I'm not sure that there has been anything on real-world assets. I don't think that guidelines have been published on real-world assets. There have been a few papers, perhaps, but nothing specific that we could point at this point.
Another question has come through from Patrick again. So how will NCAs in common law jurisdictions adapt their frameworks to comply with the EU civil law harmonization of financial services legal framework? Again, another very good question. And coming back to a point that I mentioned earlier on, I think even in common law jurisdictions, if the EU changes their approach in the way that they implement some of these frameworks, they will have to implement regulations, for example, and won't have the ability to derogate from certain provisions and apply or take a different stance. I think that will help. There is that conflict between common law and civil law jurisdictions, which might be a sticking point. But I think the best way to resolve that is to ensure that things are done by way of directly applicable regulations, which will avoid that level of discrepancy. Anybody, any other? I think that's the last question that we had. But if anyone has any other question, feel free to raise your hand. Very happy to give you the floor to ask any further questions. Likewise, we said we were going to post the link to our mini explainer of the draft guidelines. I can't see it yet, but if not, we will post it shortly. Anything else, anyone? No? Great. There's there's been another post, release research, tokenize this. Yeah, thank you very much. Yeah, there's some research on Tokenize Europe 2025, which has been posted. And we've just posted the link to our explainer, which you can have a look at. Thank you very much, everyone, once again for attending. And thank you, Anna.
Thank you, everyone.